This video is going to be a market review for this week, and also I want to touch up on the weekly forecast because I think that the previous video for the weekly forecast update is a little bit too rushed. So this is going to be the revised version, and things have changed as well. So I've learned my lesson. Next time I'm just going to wait for the weekly close before I do my forecasting analysis. Starting off, we are going to start with a daily chart. Not daily chart. We're going to start on a weekly chart for ES and NQ. Right here on a weekly, you can see that ES has closed below these two up close candles. These two up close candles is significant because it has taken out this swing high right here. So this to me is a high probability bearish order block, just like how you see it right here as well. Taken out this swing high, and then it closed below the low, and for the next week it traded higher into the bearish order block and then displaced lower. So this is what I'm expecting for next week. So I'm going to stay bearish for next week. For NQ, I don't really have to say because NQ is the leadership in bearishness in this current trend, in this current order flow. So NQ is most likely going to reach for lower targets, and I will be looking at the grading for the proportion order block. Right, so first off we have the 25%, and then after that we have the 50% of the proportion order block as target. The 50%, I think it is more likely because right here you can see that we have a new week opening gap between these two candles here, around the 50% of the proportion order block. So I believe that is going to be the draw on liquidity next week, if my analysis is right, and we are going to trade lower, continuing the bearish order flow. Right, so let's see what are the levels available on the lower time frames within the weekly bearish order block for ES. Right, so on the daily chart, you can see that we have a daily fair value gap with a bearish order block at around the 25% of the weekly bearish order block. So this area here would be my interest to look for shorting opportunities. Basically, I am anticipating short setups to form around this area here, and then I would be looking for SMT on the lower time frames to trade lower. SMT on the highs between ES and NQ over here, and to trade lower. For NQ, we have this fair value gap here on the daily time frame. So I would be using the fair value gap like this, including the volume imbalance up here. I would like to see price react off the 25% maximum. I don't really want to see price trade into the 50% because NQ is supposed to be more bearish than ES. Either it provides a IOFED, which is just one tick above this 0 and then it drops, or the 25%. For ES, I am allowing it to trade up all the way into the 50% of this order block right here, which is around this level here, right at the volume imbalance. I'm allowing that to happen because ES is more bullish than NQ. right? So you're going to anticipate stronger retracements for ES, and you're not going to anticipate, and then for NQ, you're going to anticipate stronger expansions for NQ towards the downside, right? And that's it for the weekly forecast, right? If you were to incorporate the economic calendar, we have FOMC on Wednesday and we have NFP on Friday. So one of those days is going to be the manipulation. Which one, I'm not too sure, but personally I think that Wednesday is going to be the manipulation based on the current candle's close. We are closing near the high, which means we are more likely to trade up into the fair value gap during the first half of the week. So Monday, Tuesday, Wednesday, I think we are going to trade up, and then FOMC happens, and then it forms a SMT or whatnot, and then we trade lower heading into NFP, and NFP is going to provide the expansion or the distribution to the downside, meeting up, attacking all the objectives below current market price. That is what I'm anticipating. Okay, but as you know, if you have been studying ICT, NFP has always been a 50-50. So I'm not going to put too much conviction into this current trade idea. Okay, basically not just NFP, but for the week of NFP itself, usually things are 50-50. Okay, so this is in an event if price trades higher first, but in an event if price trades lower first, we can see something like Monday, Tuesday lower, FOMC we take out the lows and then we trade high, and then again Thursday we have the 8:30 and 10 o'clock PMI, some sort of SMT up here, and then we drop back lower. So this is possible as well. I've seen it before for NFP weeks with FOMC combined together. So price action can be a little bit difficult to navigate. So in this scenario, I think personally, for me, it's better that I stay on the higher time frames to make sure that I don't get lost in the lower time frame switching of order flows back and forth. Right, so yeah, that's basically it for the forecast that I wanted to revise. Moving on, and let's see what we have for this week. That is the star trade. Okay, I think I want to do this every week so that we can see where are the best setups during the week, and then once you get the hang, or once I get the hang, I'm doing this for myself, but you can take advantage of this as well. Okay, so I'm gonna do this every week. I'm gonna find the best trade setup for the week every week based on my model, or based on the things that I know that is very clear. And once I keep repeating this process here, it gets ingrained in the mind more and more, and then I would get more and more comfortable when setups present itself. So for this week, 6 hours is the best time frame here for your entries, for your setups. At the start of the week, we are down here. We have this original consolidation here. We have SMT on the highs, and price trades up into this fair value gap right here. This move from this high to this low is ICT's favorite model to trade. That is the second distribution of a market maker sell model. So personally, what I did was I tried to look and wait for a SMT within this area here, but unfortunately I did not get them. So my SMTs, I usually look for it on the 15 minutes because that is my lowest time frame that I would prefer to use for trading the daily candle or slash the weekly candle for swing trades. Right, so unfortunately there wasn't any SMT. So this is the highs for Tuesday, high of the week. There is no SMT available for me to engage. Right, over here you could argue this high and this high, but we are really near to the market's close, so it's not very optimal in my opinion, right? And during the following day it gapped lower, and then I was here again waiting for SMT within the new day opening gap. Same thing, nothing happened. Price did not trade up into that new day opening gap. It just trended lower and lower and lower. So for this particular week, I don't have my model forming, which means the only perfect trade that I could have entered off was this model right here, the second distribution of the market maker sell model from ICT. So what I could have done is this one, put a gradient, I grade the fair value gap, I take the 25% and I take the 50% as my entries. My stops is above here. I can basically take 1 or 2 micros. That shouldn't be a problem, and I can hold it all the way down here. So that would be the best trade setup for the entire week. Right? So this to me is the cleanest, the only most obvious price action that I can see. And yeah, there's nothing on the lower time frames as I have shown you. Right, so because we have a large expansion on Wednesday, Thursday, we have a choppy price action. You wouldn't want to trade against the trend anyways, so you're not going to take longs. And over here on Thursday, you get price taking out Wednesday's low during the London session, and then it just keeps on tapping lower, 3 drives lower, and then it reverses higher. But you're not trying to take longs. Eventually it came back down during the PM session in this ugly price action that is very hard to gauge or trust or to trade because it is very fast. One misstep, you're going to incur a lot of, not a lot, but huge losses in a very short span of time, right? Because the price is very volatile right here. And if you're trying to get in the middle of the range, that is close to gambling. Okay, and then on Friday we stayed within Thursday's range. This is Thursday's high and this is Thursday's low. Right, we have reached the end of the week and the expansion has already happened on Wednesday. Therefore, Friday expectations should be low, even though we have news drivers on 8:30 and 10 a.m. Right, so even if I were to wait for 10:30, because we have 10 a.m. news, for 10 a.m. news I usually wait for 10:30 to look for any form of SMTs or any form of setups available. Right, so at 10:30 you get this price action down here. This is basically seek and destroy. We have an expanding range. All right, you have higher highs, lower lows. This is your typical seek and destroy profile. While we are having a seek and destroy profile on ES, NQ is trading lower but unwilling to continue lower. right? It trades lower and then retraces a lot aggressively and then goes lower again and then retraces back again. So this is a low probability condition as well. And you're trying to go for shorts because the entire week we are bearish. We're looking for shorts only. Okay, so I found that trading within the weekly order flow is the best because you get the best setups and you get the best price moves. Like they don't hang around, they just distribute expense away from your entries. I think that is the best type of trades to take. That is just my personal opinion. You can have yours, but I'm just sharing what I think is good to learn and good to adapt to. Okay, so even on the 1 hours, if I were to trade based off the weekly candle, that would be on a 1 hour. I don't have anything available for me on the way down as well, right? On the highs, there is no SMT, no SMT here. So unfortunate, right? And with this, I'm going to end the session. If you have any questions, do leave them in the comments section down below. If you find this insightful, do leave a like, and thanks for watching. I will talk to you again next week.